Podcast Network Asia.
You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
Hello everyone, I'm Peter Garnace, an Equity Research Associate of First Metro Securities. In this episode, I will discuss our company update on MREIT Inc. or MREIT. We continue to like MREIT for three main reasons. First, MREIT is just getting started with asset infusions. To recall, last May 10, 2024, MREIT announced a property for share swap agreement with its sponsor, Megaworld Corp, in exchange for 6 Grade A buildings valued at 13.15 billion pesos. This is the third wave of asset injections geared to realize management's vision of making MREIT the largest pure-play office REIT in Southeast Asia. Post-acquisition, MREIT's asset under management will reach 75 billion pesos, equivalent to a 52% increase since IPO. Despite challenges in the office segment, we remain positive on MREIT in view of its long runway for inorganic growth. We have confidence that MREIT will achieve its target to reach 500,000 square meters by end 2024 and over 1 million square meters by 2027 to 2030. This is given Megaworld's growing stock of commercial leasing assets spanning over 1.47 million of gross leasable assets. The latter continues to increase as Megaworld plans to launch up to 148,000 square meters of additional commercial gross leasable assets by 2026. We expect the above-mentioned factors to provide MREIT with substantial headroom to drive dividend growth from inorganic sources. Again, we reiterate that bigger is better in the REITs universe. A larger asset base begets faster dividend growth and ultimately higher market capitalization and premium valuations. Second reason, currently trading at 7.8% yield for both forecasted year 2024 and 2025 dividends per unit, we think risks are already priced in. Our forecasts indicate a 2.4% growth in DPU for forecasted year 2024 and 0.67% growth in DPU for forecasted year 2025. These figures factor in the present challenges in the Philippines office leasing sector, step up in land lease payments from July 1, 2025, and no asset injections. Against the 10-year Philippine bond yield of 6.7%, we believe MREIT's trading yield is attractive at 116 bips spread and reflects our slower DPU forecasts. Third reason, we think bond yields may have already peaked. On one hand, we highlight the slowing economic growth as evidenced in the first quarter GDP report card. On the other, inflation relief is underway following the reduction on rice tariffs to 15% from 35% previously. We note that rice is a significant driver of inflation as it accounts for nearly 9% of the Philippine consumer price basket. We maintain our buy call on MREIT with TP slightly cut to 14.06 pesos. Our new TP implies a dividend yield of 7% and 7.05% for 2024 and 2025 payout, respectively. It is derived from DCF valuation methodology with WACC at 9.7% and terminal growth at 3%. Our forecasts have yet to factor the recently announced property for share swap plan. Our back-of-the-envelope target price, post-asset infusion, factoring an acquisition yield of 7 to 7.5% and a target dividend yield of 7%, is in the range of 14.16 to 14.42 pesos per share. And that's it for our MREIT company update. Thank you.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the FirstMetroSec family.
FirstMetroSec is providing this podcast as a general market commentary. Reference to any specific security, product, or entity do not constitute as an offer or a solicitation of an offer to buy or sell any financial instruments or to participate in any particular trading strategy. The statements, comments, views, or opinions expressed by the hosts are subject to change without notice, and FirstMetroSec is under no obligation to update, amend, change, or correct any of the statements, comments, views, or opinions expressed. The statements, comments, views, and opinions expressed by the guests are their own and do not necessarily reflect the view of FirstMetroSec. FirstMetroSec disclaims any liability arising from reliance on or reference to any information obtained in this podcast.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.